Good afternoon and welcome to the Stock Market Today video by Investors Business Daily. It's December 23rd, 2021, and we are just one day away from Christmas Eve. And it looks like we got some early Christmas presents with a market that is continuing to rally off of its lows earlier this week. We've got a couple stocks that we're going to talk to you about. Ed Carson is joining me today, and we've got Tradeweb, ArcBest, and AMD. So first, maybe we just go ahead and check out the market. You want to start with the Nasdaq Composite. What do you think, Ed? Not too bad, huh?
Not too bad, especially how the week started. It was somewhat of a reversal of last week where we had this and that, and then in the middle of the week we had this follow through, and then we fell apart. Here we started off with a real weakness. The Nasdaq actually undercut the lows, which ended the Nasdaq rally. Didn't undercut the entire market rally because of the S&P 500. So it did not look good. The S&P looked like it was going to fall under pretty soon. It did not look positive, but then we roared right back, closing near session highs of basically the last 3 days. All the major indexes getting above their 50-day lines. The Nasdaq getting above this high, this sort of big reversal day, breaking a trend line. So the market looks a lot healthier than it did a few days ago when it really looked on the ropes.
Yeah, absolutely. Now we still do have kind of that heightened volatility a little bit. We've got, the last few days, while it's good to see the volatility to the upside and 1% gains or more, it is still a factor in there because if you get the opposite reaction, if you are a physics major, you would expect to see some downside in there too. But so far, so good. We did clear that 21-day moving average line yesterday and closed above the 50-day moving average line yesterday and really showed some power above both of those lines today. So that's a good thing. Now let's go ahead and switch over maybe to the S&P 500. The S&P 500 has a kind of a different look to it. That we were talking about being just less than 1% from its high, and it actually got to a closing high today. This is one of the indexes that's shown the most strength. And as you mentioned, when the Nasdaq undercut its rally day, this one held.
Yeah, and it still wasn't positive because we were worried it would close below the follow through day. So there was a lot of reasons why you're thinking, well, it hasn't fallen apart completely yet, but it's going to. I mean, that was sort of, I think, the thought after Monday that there was a very good chance that would happen, but it didn't. And the volume isn't the best, but that's sort of what can you expect heading into the holidays? I mean, it was drying up more for that reason, not necessarily that nobody wanted to buy. There was nobody around to buy to a certain extent, and we'll see that probably next week as well. Certainly from a price performance, yeah, it's hard to be too down on it when the S&P at a closing high and a lot of strength there. And it also is a reflection that the market breadth remains weak, and we can look at that soon, but at least there seems to be some breadth of leadership. It's not just techs, or it's not just this. There's actually a lot of sectors that are showing strength, which is positive for sure.
Yeah, and it looks like we kind of cleared that area. If you just kind of drew a line straight across there just seemed to be a lot of congestion. And we did clear that area for a little bit. Actually, yeah, a little bit lower there is where I was kind of looking at where we closed. And this isn't showing it right now. We did close at 47.25. So the S&P 500 was it just locked up on me. The S&P 500 was up nearly 1%. Do you have the final numbers there? I was going to run through those real quick.
I do not have it off of hand.
Okay.
I'm sorry.
That's okay.
I count on you.
Yeah, right. Well, my Thinkorswim just locked up on me. But we did close positive there. Let's go ahead and take a look at the Russell 2000.
Yeah, and it was 0.6% gain for the S&P, 0.85 on the Nasdaq, and 0.55, I think, on the Dow.
I have it up now. Yeah, so 0.6, 0.8, 0.55 for the Dow, and now over to the Russell 2000, which had the biggest gain of all at 0.9%. But this one has been the one that's been struggling the most.
Yeah, and this one actually hit like a 9-month low on Monday, did rebound from there, but that's a reflection. Okay, the last few days we're seeing winners beating losers overall, and sort of look at the Russell as sort of a proxy for market breadth. So there's been some improvement, but we've seen that before a few days. But the trend has been weak, and the trend has been weak for even longer than this. The Russell has been lagging for most of the year. So good start here, but it's still below the 50-day line. It's still below the 200-day line. So that's just one reason not to get too excited about this rally. Then, some improvement on breadth, but still a long way to go before you'd say that it's healthy.
Yeah. And while you mentioned breadth, on MarketSmith, at least, we do have a couple of market indicator pages that we could take a look at for the Nasdaq. That's going to be GMIAB. And, again, we saw some pretty dismal breadth as the advancers were far outnumbered by the decliners, seemingly day after day. And as we've been mentioning, a lot of stocks below their 50-day moving average line still, and below their 200-day moving average line. But that has been improving. If we switch over to GMIAA, that shows us the advanced decline line for the NYSE, not quite as dismal, but still in a very solid downtrend. So I guess we'll have to see if we can start breaking that downtrend. We are seeing a little bit more positive action of the new highs versus new lows, but those new lows were really overpowering for a while.
Yeah, and I think they were higher today on the NYSE. I don't know if we got there on the Nasdaq. This is through Thursday, these charts, so they'll look a little better in a few hours, when they get updated. But still, the trend has been weak.
Yes, and you mentioned that we seem to have a little bit of broader participation. It seems like for a while there, the rotation was getting to be so quick. You had a couple days where oils were up, and then they would get hit, or financials, or industrials, and it just never seemed to have anything trend for very long. What kind of trends are you seeing now in terms of the potential leadership in this market?
Well, travel stocks are leading, and that's a real positive because it's, that's sensitive to Omicron. So if you're worried about how Omicron might affect the market, travel stocks are doing very well. That's a positive. I mean, that could obviously reverse. We get a negative headline on Omicron and all that could fall apart. So it's not like it's a guarantee in that, you're seeing some chip names. We'll look at that. Trucking firms. There's also some financial market things, and we're going to look at that with Tradeweb. There's just a wide variety of sectors that are actually doing well. Home builders, get a couple more good days. Even energy stocks look good. It's just amazing. It's really just, look, the market starts looking better. A whole lot of things start looking better. I mean,
right.
We were showing things like the Nasdaq looks like a double bottom. That picks up a little bit more. It's getting up there. There's just a lot of, all of a sudden things that look so weak will start looking promising. And not all the things that I talked about had a ton of leaders that are breaking out now, but some of them are breaking out and a few are setting up, and it's just a little bit more strength. And then there'll be a lot of opportunities for buyers.
Yeah, and two areas that we have been looking at that were showing strength that aren't showing strength so much right now are the utilities. XLU is the sector spider fund for that ETF of utilities, and XLP. Both of those have been a little bit slower going lately, not participating as much in this rally, and that's not necessarily a bad thing.
No, and those are sort of defensive plays and sometimes low interest rate plays, really in the case of utilities. So that's where people park their money, like a lot of funds that have to stay invested. Let's put it here. But the moment risk on comes back on, they might shift over, or at least, maybe fall or lag. And so, yeah, it's not a great sign when those are the sectors leading. It doesn't mean that they can't do well, but you'd rather see some other sectors taking the lead.
Right. Now, financials you mentioned are starting to come back a little bit. We talked a little bit earlier this week about the regional banks, but let's take a look at Tradeweb. The ticker symbol on that is TW. Now, this is in the financial services specialty. It kind of does the over-the-counter markets, and what we saw here was a nice bounce off the 50-day moving average line, cross above a downtrend. Is this an actionable thing, or is it too late because it already broke out of a previous base?
No, this is a nice rebound here. It's just about where you'd like to see it. So it was actionable sort of in this area. It broke the trend line, or maybe this last week's high. So that was actionable. It's not too far from that. And actually looking on a weekly chart, it's not going to have it because it just hit a new high for a moment. So, but this was a 4 weeks tight, which is its own kind of entryway. And if this had just held off by a few pennies, it'd have been a flat base. So this is basically, so I'd say that area is still actionable there as well. If it can punch above the left-hand side of this area, next week, that would be its own entry point. So I think it's still actionable. It's less than 5% above the 10-week line. So it's really not extended even yet from that. So there's a lot of positive, base on base formations are really bullish in a choppy market. And that's what we've been seeing. And the relative strength line is looking pretty strong.
Yeah, and I think that's where that tight action, where it really allowed the 10-week moving average line to catch up to the price action. And the fact that what was going on in the market, as you showed, these undercuts and everything that looked really negative on the Nasdaq, and even the undercut of the follow-through day for the S&P 500. When you've got something that's holding and resisting that downtrend, that's where the relative strength line can really improve and set a stock up as a potential leader. Let's go ahead and shift over to ArcBest. This is one that we've been talking about a lot. The trucking firms were certainly seeming like they were an area of strength. The relative strength line was very strong as the follow-through day happened in October, but then it pulled back along with the rest of the market. What's your take on ArcBest here?
Yeah, I mean, there's a lot of positive. You can see this blue dot. Well, that means its relative strength line hit a new high this week, and it's not at a new high. For it to hit a new high with the stock not there, just shows you how much outperformance it has. It looks like it is a bullish. It's an upside reversal, a very bullish trend. It started off poorly. It was looking weak. It was undercutting these lows, starting to think like, well, maybe this is a sell signal, and that it was at a turning point. And so now, when the market rebounded, this one definitely came on. It's a big gain. This is, not just a slow lane truck. This was cruising along, and so nice action there. It's it's now getting a little bit above the 10-week line, but just breaking the trend line. So I think there's that, breaking a trend line, breaking this short-term level right here once again. So I think those are reasons that you could definitely say are actionable.
And this one does look a little bit more like that Nasdaq. It did undercut the December 3rd lows. If you had bought it, which again, no one would blame you. It kind of looked like it was breaking that downtrend before. If you got shaken out below 100, what do you do? Is it let it pass, or do you buy it back?
Yeah, and that would be hard. See, that's one of the problems is that it is hard to know just in general buying anything in this early sign of a stretch the first couple of days. But today it looked like that was the day. Okay, now it's sort of clearing area. It actually was the strongest volume of these three gains. And on a day when, a lot of people were going home, this one had pretty strong volume, all things considered. So I think this was, one that you can go in and buy back, even if you have to buy it at a higher price, because it's a safer situation. It's just, that's the thing. It's just like, do you pay it? Yeah, you're paying a few bucks more, but the risk is much less, because right here, it looked like everything was falling apart, or starting to fall apart in the whole market. And in that situation, this would have kept on falling almost certainly. So the risk was definitely off in that regard.
Yeah. And let's not forget that there's the opportunity cost. If you decide, hey, I'm not going to buy this back because I lost money on it, or I can't buy it at a higher price, then you are potentially knocking off some potential winners off the table. Not to say that ArcBest is going to be the one that blows the doors off, but it's just a process that you have to get used to, because otherwise there's a lot of merchandise that you're,
just forget that you'd made that trade. What is it now? What is it now? It's so hard. And it's easy to say. I'll tell you, Justin, you set that aside. But yeah, you need to set it aside. Would you buy it now if it weren't the other situation with that condition? And if that's the case, then that's what you need to do.
It's kind of like those pitchers needing to shake off a bad pitch. You got to have what they say, the mind of a goldfish, as Ted Lasso would say. So let's go ahead and switch over. Chips, another area of strength. This is an area that really seemed to hold up well. We've got the electronic semiconductor fabless group that is the #1 group, and AMD, Advanced Micro Devices, is one of the leaders there. Here we are crossing a downtrend, support of the 50-day moving average line. Seems like a familiar tale here as we are looking at these stocks.
Yeah, and that is one issue. And it came down harder to begin with, and then it came down pretty hard again. So it came down pretty hard. It wasn't as gentle as ArcBest. I mean, it's a more volatile name, so you understand that. Really powerful rebound on this day, on the follow-through day on the Nasdaq, and then came right back down. So that was dispiriting, easy to be shaken out, especially if you bought up high. If you were buying near the highs of the day, you almost had to sell. It was getting to the 7 to 8% losses at some point, but it's come back. It is definitely breaking a trend line. It's within range of the 50-day line. I think you'd like it to maybe you could argue, well, I want to wait till it is back above this level again. It got there and pulled back, but above the 1216 high, you definitely could move into this area once again, knowing that it is a very volatile name.
So let's kind of close this out with some maybe an overview of what should investors be doing now. I mean, it's right before Christmas Eve. You've got a lot of people that are maybe going away for the holidays, and you know, you're done looking at stocks because of this back and forth action. But you know, here we are. It looks like things are improving. Does that make you feel like, oh, I could be missing out? Then there's the whole, you know, Stock Traders Almanac that has pointed out the Santa Claus rally, which is, you know, really the next 5 days of trading, or a little bit more than that, where you do tend to have a rally. So what should investors do, Ed?
You know, if you really can, go through your screens if you have a chance over the next few days. It's a holiday weekend. Go through them and work on those watch lists. Look for those high RS lines, stocks, you know, stocks showing strength, stocks that have held up or regained support, like at the 50-day line. And then maybe hone in on some, you know, hone in on those 10, 20 stocks that you really think, you know, oh, okay, these are really, they are actionable or just about there. And I'll draw your alerts and really think about, you know, look into them and get your game plan going. I mean, I understand that there might be less time if you have to spend time with family. I mean, if that's really no, but obviously you need to be doing, like, you know, but if you're spending time with family, you're traveling, but try to do that, because especially if you're going to be active and involved, just so you can take part next week, maybe. And again, it may not do anything. You just want to be ready. It could be that the markets do not have a Santa Claus rally. Just because the almanac says that it often happens doesn't mean it will, but you want to be prepared if you're going to be taking part there. And if you're not, then, you know, maybe you just wait till the new year. If the market has legs, that's okay. You know, there'll be opportunities in the new year. So it's not like, oh, if you're not there December 27th, you're never going to make money in the stock market ever again. So I don't want to overplay it. There's
Yeah.
but to do that homework before you get involved. Don't just buy anything. You know, don't just run into the store. I need to buy something. It's like the classic, you know, like stereotypical father on Christmas Eve looking for a present. I'll buy anything. It's like, no. You figure out what you're gonna want to buy and get a good deal on it, and do it smart, not in some kind of frantic, mindless kind of way.
Well, and to that end, we also really talk a lot about not plunging in. You know, sometimes
Yes.
that frantic buying, it's not just about necessarily buying the wrong thing, but buying too much, because it can be easy to load up when things are looking great. But again, with the volatility that we've seen, you could really get chopped up and take some much larger losses than you need to if you're buying too much too quickly.
Yeah, and also try to look for some diversity that might help you with sector rotation and just keep you in tune. Like, you wouldn't have thought necessarily a week and a half ago that travel was going to lead. I mean, there's been
Right.
back and forth, but there it is, and boom, there they went. You know, you don't know what's going to be going, and it's still a bit uncertain. So I think that's just staying in touch with it at least. It's probably good for your portfolio too, but definitely in your watch list, have a diverse list of sectors and groups, so you can be on top of what's leading the market.
Yes, and as we've been mentioning a lot this week, those relative strength lines, you know, looking for those blue dots is a great place to start. So, any final thoughts?
I hope everybody has a Merry Christmas, and we'll see everyone back on Monday, I suppose.
That's right. We do have the market closed tomorrow for Christmas Eve for the holiday. So there will be no stock market today tomorrow and no IBD Live. So you guys will have to just carry on without us. But as Ed said, we will be back on Monday, and Allie will be returning from vacation. So you'll actually have that to look forward to as well. Hope everyone has a happy holiday, and we'll see you next time.